Time Bank believes in a banking future with more for every entrepreneur. Start paying less and getting more. With Time Bank, you've got this.
Welcome to Small Business Evolution. I'm your host, Nontobeko Gumede. Now, managing debt is crucial for the financial stability and longevity of any small business. To reach this level of management, SMEs would need to thoroughly understand when debt is good or bad for their business. Joining this conversation of debt decisions is Idan, Jaan, who is the head of partnership at Retail Capital, a division of Time Bank. Idan, thank you very much for joining us. Now, naturally, debt is a concept that would be viewed negatively by many. Despite the popular sentiment, what is considered good debt and bad debt?
Well, thank you for having me. It's a pleasure. It's a pleasure being on your show. So we at Retail Capital, which is a division of Time Bank, we strongly believe that debt is what we like to call fuel for business growth. But like you're saying, there's both good and bad debt. So the way we view good debt is purely revenue generative debt. So if you're trying to grow your business and you need to access some liquidity, you have a lot of inventory tied up, you have a lot of assets tied up, and you need a bit of cash flow to grow your business, buy more stock, renovate your restaurant, expand your business, whatever it may be. If debt is leveraged properly, it can only fuel growth. Now, what we like to call bad debt internally is debt that you just need to cover previous loopholes in your business. So you're essentially borrowing capital or borrowing cash to fund other previous debt or other interest-bearing facilities in your business, and you find yourself going into a loophole whereby you can't seem to get out. Now, as a lender, we have a fiduciary responsibility to make sure that we provide capital and debt to the right types of businesses for the right types of purposes. So it's up to us to determine whether a business is applying to us for debt that is revenue generative, which is good, or they're just looking for cash to kind of plug a hole that we know that the next month they will find themselves back in that hole again. So it's more of a short-term fix rather than a long-term view that we like to call good debt.
Now, let's just zone into bad debts for a second, just so that SMEs can avoid this. When looking at small business owners, like any other business, they deal with day-to-day running costs. So would it be a wise choice for entrepreneurs to use debt to pay for items such as water and electricity?
So it depends. Mostly we don't like to provide debt to businesses to cover the operational expenses, but sometimes small businesses, they buy a lot of stock or they invest a lot in their business, and all their money that they had gets tied up into stock, which will convert into future revenue further down the line. But at that point in time, they find themselves in a cash flow pressure. So if this operational cost, kind of plug has been going on for a while, then obviously we know that they're using debt for the wrong purposes. But if they've always been paying their electricity, their salaries, etc., but just for a couple of months because they've invested heavily in their business, they ran into a bit of a cash flow pressure, or and they need a bit of debt to bridge that. So that is a perfect example of where we would utilize our capital and our facilities to help them.
Now, SMEs are forever looking for opportunities of securing funding. So what are some of the criteria that Retail Capital uses when deciding if a small business qualifies for the funding or not?
Yeah, so we have a very, very mature, credit score. I mean, the business has been around for over 10 years. We've funded over 50,000 businesses to the value of over 9.5 billion rand. So over that tenure, we've developed some very sophisticated models to determine whether the business should access funding or not. We usually like to look at minimum qualifying criteria of around 30,000 rand in revenue per month, and we like to see the business have a minimal track record of around 6 months ownership and 3 months of trade. that allows us to get enough data to determine whether the business is requiring debt for good purposes or bad purposes. We usually process around just over 5,000 applications on a monthly basis. So that level of scale and that level of growth allows us to really have a view into a lot of businesses, and that allows us to get our scoring model and allows us to get our decision model to be precise enough to understand whether the business is requiring good debt or bad debt. Whether they require good debt, we have high approval rates whereby we provide funding to them, and using technology, we are able to provide them with funding at a really quick turnaround time. And whether we see a business is applying for bad debt, we we don't provide them with the funding, but we have a lot of other platforms that we lead them to allow them to get mentored and educated, and get them to the point whereby we believe that they are reaching out to us for the right purposes.
That's just speaking into that mentorship. Is it sort of a drive that will help them rethink just their concept around loans and funding before having to make that decision of, I want to approach a lender for funding?
Sure, because we believe that the easiest thing to do is to say, I need more money wherever it comes from, but actually to understand what type of money you need, because people think money is money, but at the end of the day, there's a lot of different financing tools and financing instruments in the market. At the end of the day, it's still money, but how you get and how you repay that money, there's various forms of financial instruments in the market. So we believe the more educated the business owner is, the more useful that money will be to his or her business.
Well, thank you very much, Idan, for just sharing your insights on how SMEs really need to reshape their perspective when it comes to managing their debts and also understanding it.
Thank you very much. Thank you for having me.
That was Idan Jaan, who is the head of partnership at Retail Capital, highlighting the importance for SMEs to take the necessary steps in managing their debt and protecting their credit records.
TymeBank believes in a banking future with more for every entrepreneur. Start paying less and getting more. With TymeBank, you've got this.